Weekend.
You
Big
too.
day for CNBC's own Jim Cramer. President Trump tweeting this morning, I agree with Jim Cramer. The Fed should lower rates. They were way too early to raise and way too late to cut. And big dose of quantitative tightening didn't exactly help either. Where did I find this guy, Jerome? Oh, well, you can't win them all.
Despite the rate uncertainty, the S&P is within 2% of all-time highs. So if you're an investor looking at the market, where are there still opportunities to buy? It's been the subject of Jim's fantasy stock draft on Mad Money, and he joins us now from the studio to discuss. Jim, good afternoon to you.
Hey,
Thanks
guys,
for joining us.
How are you? I miss you both. What's going on?
We're very well. It's
always love having you on.
All the better for seeing you, Jim. Let's start with the tweet. I mean, how quickly could Jerome Powell turn things around here? Is one cut enough for you to be back on board and think he's doing the right thing?
Sarah talked last week, earlier this week or last week, about how you can't let the stock market bully you if you're the Fed chief. I think you can let the bond market bully you because the bond market's telling you exactly what to do. And I think that Jay Powell's having a problem listening, just like he felt that we needed maybe 3-4 hikes in October when most of the data turned soft. He is still talking about the idea, but maybe we do 1.25 points. He has to be with alacrity. And the reason why he has to be is he's so high. The rates are so high versus everybody else. And I know there are a lot of hedge funds will say, well, Jim, didn't you see how unemployment's so low? We're in a different regime. We're in a regime where our country can have tremendous growth. But the Fed is a huge gating factor. And I think the Fed made a lot of mistakes with the aggressive hikes. And it's tough for Jay Powell, who's a very good man, to be able to say, hey, listen, I screwed up. But that's what he did.
Hasn't he found religion, Jim? I mean, he started cutting interest rates. He's totally changed his posture and sounded a lot more dovish. The market didn't have a problem with what he said today.
Well, I don't know if he's found religion. I think he's looking for religion. I don't want to say that he's a convert, because I think if he was a convert, he'd be saying, you know what we want to do here is get this economy so it is humming. You know what he needs to do? He needs, look, the president, what he said is, where did I find this guy? And the answer was, you found him. He's the opposite of Janet Yellen. I think Janet Yellen would have said, listen, let's get this thing humming. Let's get everybody to work. Let's get all the people who have been disenfranchised in this country to get jobs. Let's start getting a little wage growth instead of just having it so that the CEOs have wage growth. And the president, I think, pretty much agrees with that, too. I mean, it's a little shocking. He agrees with me.
Jim, back to the tweet itself. Do you agree with the president's tone in the tweet that he made a mistake and that Jerome Powell is the wrong man for the job?
I don't like. There was a time in my life where I was ad hominem, and I would say things like that, and I've tried to get away from that. And the reason I have is because I don't want to say things about people that are untoward, who I know are working very hard for the country, who just have different views from me. And I've known Jay Powell, and as a person, obviously, I think that you don't like to make fun of people. I'm sorry to sound like I'm a fifth grade teacher, but maybe that's where I'm back to.
Yeah, diplomatic. Hey, Jim, we wanted to ask you about stocks, especially ones that are disliked right now in this market. It's been a big theme of yours.
Sure.
What can you tell us?
Well, I mean, take a look at a stock like CVS. Okay, now, that every time that Senator Warren or Senator Sanders says something bad or goes for single payer, they slam the stock because it bought Aetna. It yields 3%. It had unbelievably good same-store sales numbers, really amazing. It's selling at 8 times earnings. That's not right to me. It's not an eviscerated retailer like some of the department stores. It's a company that's very vibrant with a really terrific CEO, Larry Merlo. Everybody likes him and he's doing a great job. The stock is just plain old too cheap. I like Campbell's. I mean, look at what happened with Campbell's. They just put up some really good numbers. They are finally getting delevered. They have a lot of good brands, and I just think it's a very inexpensive stock. Look, I will tell you that I think that Amazon is inexpensive versus Walmart, Target, Costco, and Home Depot. And I know that people don't want to ever hear that Amazon's a bargain, but I think Amazon may be a bargain.
Jim, one I think we've got on your fantasy portfolios, Roku. I don't think that's underperformed much.
No, but I think that the great thing about Roku is that we just have more and more cord cutting, and a lot of people have been betting against the stock, and that makes no sense to me. And the reason why it makes absolutely no sense to me is because it has changed into a very different company from when it came public, and yet people continue to underestimate the power of this company and what it's doing. And I just think that it's a revolutionary disruptor that is not valued high enough in this market. Even though I know that on a given day it has gotten too high, I feel strongly that, you look at Roku. I mean, is Okta cheap? No, it's not cheap. Is T-Mobile cheap? Yes, absolutely. ServiceNow, it's come down a great deal. Look at Salesforce. I know these stocks are in a funk right now because people feel the economy is accelerating, or at least there's a cohort that thinks that. But these companies are doing so well, and Salesforce has been unrelentingly going down since that last quarter.
Why?
And that last
they had a good quarter.
Look at the group. Look at the cohort. Look at Twilio. Look at Okta. Look at CrowdStrike. I mean, these are all the same stock because they're all in the same ETFs. And I think that the ETFs are just plain stupid. They bring the stocks down without any sense whatsoever. I think that, look at Twilio down. I mean, could Twilio break down to 110? Would that be a gift? It's a platform, for heaven's sake. It's a platform for the new economy. So I like these stocks when they're out of favor. When they're running, no. I will say, listen, wait for a pullback. CrowdStrike's tougher because Palo Alto Networks came on Squawk on the Street yesterday, told that CrowdStrike's getting crushed. Zscaler reports next week. They're going after Zscaler. So there are some companies that are really in the crosshairs of other companies in cybersecurity. But Advanced Micro at 30. I got to tell you, I think NVIDIA, I know it's up 20 straight. But NVIDIA is a great company, and sometimes you have to pay up to get great companies, but not when they're running. And the ones I've mentioned are not running right now. So I think you just got to stand there and buy some and take some pain. People don't want to take pain. They just want to have whatever's working today. And I used to be that way, too, as in terms of being an ambassador. What a changed person. I've really sobered up and got mature.
Fifth grade teachers.
Jim, I want to ask you very quickly. Apple, Goldman Sachs.
Mrs. Mixer, she was super. I hit her in the head once when I was playing dodgeball. She never forgave me. I didn't mean to.
Dodgeball. I thought that was an imaginary game. Anyway,
no, it's a real
Jim,
game.
just
like
quickly
cricket.
want to ask you about a great game. You don't want to get hit by a cricket ball on the head, though. Just want to ask you about the Apple Goldman Sachs card. I've seen you've been tweeting about it. You've got it. You've been using it for a while. I've been using it for a while. What do you think about it?
Well, it's heavy. Look, you got Goldman's at 8 times earnings. I mean, that is unbelievable. What the heck is that? And that is because people don't understand the power of the card. They didn't read, by the way, everyone has to read Katie Huberty's piece about how cheap Apple is today. I thought it was very, very good. But, I mean, Goldman is trying to change. Look what they're doing, man. They're getting rid of partners. You know how hard that is? That's really hard to do. But if you're trying to beat the numbers, you got to do that. Goldman has the lowest price to earnings multiple of any of the financial institutions I follow. That's an embarrassment. That's got to change. And they're doing it. They're changing. Hey, by the way, no more of the DJ thing. That's lost to me. You do the DJ thing when you're multiple 17, you trade at 300. Sorry.
Interesting take.
Hey,
Jim Cramer.
he knows
Nice
I feel
for
that way.
David Solomon.
He knows I feel that way. You don't joke around when your stock's at 9 times earnings. You get serious.
Jim, he needs to come on and answer the question, perhaps.
Well,
but, Jim, as always,
guys,
great to see you.
I am now like Jefferson. It's finally happened. Kind of like Gandhi, Jefferson, and my old buddy, friend, the Dalai Lama, whose last book was Dynamite.
There we go.
Yeah.
The peacemaker. Jim Cramer.
But he's mindful. He's mindful, and he's buying Lululemon pants.
Lululemon's not done.
No, he's not. He said he was only buying it as gifts.
Sarah, athleisure's higher than ever.
I take it for numbers.
Don't worry.
Yeah.